welcome to another episode of InsurTech Unscripted. I'm here today with my dear friend, who's actually one of our investors and is a solo GP, but a very experienced entrepreneur and investor, Itamar Novick, talking about InsurTech and what are some of the trends that he sees in the market. Before we get it started, maybe we could start off, Itamar, by welcoming to the podcast and you talking a little bit more about your background, how you got into InsurTech, and what do you do? And we'll just go from there.
Sure. Thanks for having me, and you're giving me way too much credit that I don't necessarily deserve. So thank you for that. I'm very excited to, be part of your journey and Kovu's journey as well as an investor, and love being here on the podcast. Thanks everybody for dialing in and listening to this one. So appreciate you spending the time. And I guess just a little bit about me. So I've spent my entire career in startups. And I've been on all sides of the table. I've been a founder and operator. I took my last company, a company called Life 360, public in 2019. As an investor, I was first trained on Sand Hill Road, worked as a junior guy at Morgan Terra Ventures. Later, I founded an incubator called Upwest Labs that helped Israeli companies accelerate their go-to-market in the US. And for the last 10, 11 years, I've been investing as a solo capitalist, which means that basically it's just me, but it actually takes a village. I've got several venture partners and I've got venture advisors helping me supporting our companies. And I think that folks like me are potentially some of the best partners for early stage companies because we're more flexible, more nimble, and 100% of my time is spent really supporting my founders and coming up with the next best investment versus spending a lot of time on internal politics and doing partners meetings and all those different things that you see in venture capital firms. So that's really a lot of the thesis behind Recursive Ventures, which is a $20 million fund that I run today. I mostly invest in pre-seed companies and seed stage companies at the earliest stages, and then help my founders get momentum, get from 0 to 1. That's sort of really my focus, and hopefully then they're off to the races and they end up building a unicorn. So that's really what I focus on day to day, is supporting entrepreneurs at the earliest stages.
So you actually, I realized I've completely forgot about this, to be honest. You also have a very interesting perspective about a question that I think a lot of people might have, and myself sometimes. How is it that there's so many Israeli founders in insurance? I know the answer to it to some extent, but I wonder, I just want to get your thoughts on it. How is it that insurance is so dominated, InsurTech, with, successful Israeli entrepreneurs?
That's a great question. And I didn't mention, but I am originally from Israel, born and raised, moved to the San Francisco Bay Area around 13 years ago. And, completely randomly, being Israeli, I've seen some of the best InsurTech entrepreneurs in history, actually, come from a similar background to mine. So whether it's the founders of Lemonade and Hippo and Next and lots of the cyber insurance companies, Etbay, and the list goes on and on. There's actually, I think, more Israeli-American founded InsurTech unicorns being created over the last decade than any other country in the US, which is very surprising. And I think the reason why that's happening is a couple of things. So first of all, Israelis have been historically, on the technology side of things, kind of very capable, right? The academia training, the IDF, the Israeli Defense Force training around handling massive amounts of data, being able to process that data in order to do things like underwriting, for example. Of course, in insurance, underwriting is inherently, a data related, data augmented process, right? So that's definitely one area that a lot of Israelis have strong technical foundation in that helps them sort of, build some of the next models. I think another thing that's just, in general true about Israeli entrepreneurs is they're very scrappy and they're very aggressive entrepreneurs, in the sense that Israeli entrepreneurs are great at finding opportunities in the market and sort of exploring them very, very quickly, very, very effectively, kind of really accelerating the journey from 0 to 1, from here's an idea to something that we want to build. Israelis are very good at building at the first stage, very entrepreneurial in nature. So I was actually part of that journey in a way because I invested in a company that Guy Goldstein, the CEO founder of Next, built before that, a fintech company called Check. So when he started and the stuff from Hippo started building, some of these companies, I kind of saw their journey early on, and they were just very early to understand that insurtech presents a major opportunity, and just jumping in, building companies really quickly, getting them off the ground, and making progress in the market. And I guess Israelis are just good at that, and that's why we've ended up with so many, insurtech Israeli founders.
Yeah, I mean, first glance, it looks like everyone in Israel figured out insurance is a good market to disrupt. But I guess the main reason is a lot of founders were looking for good opportunities and realized insurance is actually a good market versus being an expert from before.
They
So
touched in that in a way, but we'll talk about that more in the podcast because I'm not sure that building those MGAs was actually the best business opportunity at hand. But that's a whole different conversation, I guess.
actually, no, let's go deeper. So I know, we spoke a little bit about this before in our previous conversations that one of the most controversial ideas that you had from before, which I think now is not as controversial, but I think the way that you describe it is actually a level above what everyone else I've heard saying is that you fundamentally think MGA or insurance businesses are probably not good VC backable businesses. So let's just talk a little bit more about that. What do you think MGAs are not good investments? Period. Not just historically, just as a business model category are not exciting.
Yeah, that's a great topic. I think sort of insurance professionals outside of the startup ecosystem have been talking about for a while, and I'm kind of just I'm basically rethinking talking about what they've already highlighted in the past, but I think I'm doing it from a venture capital point of view, and it's more kind of nicely defined that way. So I've intentionally, and I'm an insurtech investor. I've made multiple, investments in the insurtech space, and actually, in my company, Life 360, I built a significant insurance business together with our partners at Allstate and other insurance carriers. And I've always fundamentally believed, since I started investing in the insurtech space in 2014, that the MGA or carrier model is actually not a good fit for a venture capital scale business. The fundamental issue with many of the insurance carriers, with building an insurance carrier business as a venture backed company, is that really at the end of the day, it is a zero sum game to a certain degree. It is actually a capital management game, right? Especially in the PNC space, your ability to create significant operating margins is kind of slim. You know, when you go to the more traditional spaces that have significant scale in insurance, like auto, like home, and you look at the kind of margins that mature companies in that space operate in, it basically does not lend itself to a business model that should be backed by venture capitalists. And this is a very controversial point of view because we've had all those VCs invest in Lemonade and Hippo and this and that and all those companies. And some of those companies are doing relatively well today, but hey, look, they're actually 70 to 90% down as public companies, SPACs or otherwise, in the public markets. And the reason why that's happening is exactly what I'm highlighting. The insurance care business is actually not a great business for venture capital investors. So for me personally, what I've done is, and I've had multiple opportunities to invest in MGAs and insurance carriers as an early stage investor. I've intentionally avoided investing in those MGAs and focused instead on the agent broker layer, which also is one of the reasons that brought me to invest in Kovu, right? That's, I really think that in the broker layer, the business model that can be created is a much better fit for venture capital. And that's why I funnel all my energy and focus on that and on technologies that help carriers and brokers to basically increase productivity and increase operating margins. Those are the two areas that I focus on as an investor.
So let's go deeper because that's a little bit harsher statement than what I've typically have heard. So a lot of people when they let's do this before we go there. Maybe it's a better way to phrase this question is, what do you think? I mean, you kind of spoke about it, but I want to see if there's anything else that I'm missing here. that looking at historical input, not just from a public market multiples, looking at historicals, MGAs, and kind of like that insurtech carriers have got wrong. Because like, but business model wise, I understand some of the things that you're mentioning, but like, what else do you think they've got wrong? And then I want to take all that and then go into, is there any room to create any business, or like, as a category, everything is going to be just, it's not going to work out?
Yeah, that's a great question. So first of all, we're not talking about historic MGAs because Lemonade is not the historic type of MGA.
Digital MGAs and digital insurance. Yes, sorry, I should have.
They basically leverage the concept of MGA to create a path that leads them to become an insurance carrier. They're insurance carriers. Eventually, they become insurance carriers. They just start off as an MGA because they need to get enough, traction in the market and enough, capital to back their policies, right? So it's just a journey, but they eventually become insurance carriers. And I'm not saying they did anything wrong. I actually think those are amazing companies. I'm just not sure they should be venture backed, because conceptually what venture backed businesses are all about, and it's mostly driven by software, is that the cost of servicing one more customer trends to zero, right? If you build a piece of software and the N+1 customer comes along, you have some sales costs, you've got some other costs, but the cost of actually delivering the software service trends to zero. And that's how at scale, in software businesses, you reach operating margins of 50, 60% or more. That is absolutely not the characteristics of the insurance business. The insurance business, because depending on the line that you manage, right, the claims, add up. Well, there's always exceptions like title insurance, but I'm talking more about P&C, for example, right? The claims could add to 50, 60, sometimes even 70% of the overall premium, right? So when you start adding up claims, cost of servicing, marketing costs, which are very significant in this space, right? You get to a business that has an operating margin of somewhere between, zero, sometimes if it negative, to 5%. 7% operating margin in the business. That's what happens in most lines, right? And that does not lend itself to a venture-backed business. It is a low-margin business. It is essentially a race to assets under management, right? Like a lot of the big insurance carriers that we see, whether they're private or public, they're basically asset management companies. They manage billions of dollars of premiums that they collect from their customers, and they leverage them to deploy the capital and actually create returns. That's not what the new generation of startups that were built, that's not really what they're doing. They're trying to make money off the basic insurance business, which is basically a zero-sum game in P&C especially. So I think that's fundamentally what I'm saying. Lemonade, Hippo, Next, great businesses, absolutely should have been created, but I'm not sure they should have been venture-backed. And if they were, early stages is fine, but not to the tune that they have been backed, right? There's been hundreds of millions of dollars, if not billions of dollars, put into those companies with the assumption that they're going to, change the nature of insurance. I don't think they can. I think they can do a better job. I think they can do better underwriting. I think they can do better marketing. I think they can provide a better product to customers. I truly believe in that. They're innovative, cutting-edge companies, but they're not going to change the fundamental business model, which is insurance, right? And they're not going to be valued at tens of billions of dollars unless they reach the scale of a Progressive or an Allstate or Farmers or one of those big players. And I don't see that path unfolding in the near future. It's just really, really hard. So I think that if you want to ask what went wrong, I don't think it necessarily went wrong. I just think the wrong investors potentially piled too much money into the wrong business model.
Very interesting. So let me think about it this way. Again, I have obviously my own opinions, but I want to get better understanding of yours. If they are not carrying any risk, and if they are an MGA in a way an MGA should have been, which is just basically managing the organization and not carrying any balance sheet risk, where they take 25, 30% commission, and everything is digital, moving towards, like, trending towards zero for that specific, part. Would that make it a good business, or still would it make sense?
I feel much more comfortable about that. First of all, it's way more predictable. You don't have parameters like cost of capital because you don't need to have risk capital in place, right, to actually being able to back any potential claims. So that makes it easier. You've got an explainable expectable revenue that's coming in, which is the broker, agent share, whether it's 10%, 15%, 20%, depending on the line, right? So it's expectable. And really the cost that you're dealing with is mostly customer acquisition and servicing, depending on how much service you provide, right? So I think because you're not doing all those different pieces, it actually gives you the flexibility on focusing on one area or the other. Let's say you've got a magical way like Kovu has to significantly reduce cost of customer acquisition, right? Because you're really, bringing agencies to the digital age. And in that process, they need you to really bring them to the forefront of technology. And in that process, you get to access their customers and work with all sides of this equation to make their experience, the product experience, better. So it gives you access to customers in a potentially cheaper way. That equation I understand. I think that can add up to a venture-backed business and a great one, because you're basically undercutting a lot of the other agents out there, reducing customer acquisition costs. That's the biggest factor, right, in your margins. And you're driving a major innovation there, the point that you can actually reach operating margins that are 50% or higher. An insurance carrier can't do that in their business. And that's what's fundamentally making it much easier for me to back a company like Kovu versus, the next lemonade.
Got it. Okay, now I think I understand. When you say MGA, you mean more MGAs moving towards balance sheets versus MGAs that are on this side. Got it. Okay, that makes sense. So because like one of the things that we keep wondering about is like if you're looking at opportunities in the insurtech market now, one category that has been brought up quite a bit is the category of like new risk MGA, because one thing that has happened historically speaking, if the MGA is focused on distribution is hard. I mean, everything you spoke about until now is more about the balance sheet risk and asset management, which is in your terms, a non-VC backable business model, or you shouldn't be this much back. But also, distribution is very hard as an MGA, like finding new clients and all that. And now you're competing with the State Farm and the Geicos and all this people in the world. Historically, the first wave of insurtechs, a lot of them underpriced the market, but then they had massive loss ratios. I mean, so much so Hippo even stopped writing any business in the US, like because recently. So the question is like, what are the opportunities for MGAs, and could that be a category? The reason I'm bringing that up is because we started with like MGAs as a category are bad, but I want to see, is there a category of MGAs that could potentially make sense as a?
We're talking about MGAs that are trending for becoming a carrier, that they're actually carrying more and more of the risk.
Old school MGA model, so non-risk carrying, the one that. No, I mean the
old school
MGAs the MGAs that are not. Imagine I want to start a company today. And I'm not trying to carry risk. I'm just trying to kind of be able to like have a more digitalized product, completely backed by someone else. Is there a category of MGs that makes sense? Because from one side is all about asset management moving into kind of becoming an insurer, that you're saying it doesn't make sense. And then the other side, we know distribution is very difficult. Is there a category of MGs that potentially might make sense to you? Are you excited about?
I think there might be, and that might lead us to another set of questions and conversations that we can have specifically around data and AI and how that can be used. So I think there are opportunities potentially for MGAs, more like old school MGAs, that are going to do more and more and more of the underwriting for products for different insurance products on behalf of their carrier partners in smarter ways, right? So whether it's being more productive, leveraging AI, whether it's leveraging new types of data sources, right? And working with carriers to create products that are supported with those new underwriting signals and new types of data. I think that's where there could be opportunities. So sort of innovation around underwriting and usage of data. But I would say I don't consider myself an expert there, right? I think that there's people that probably know more about that than me. The other opportunity that's out there, and I think to a certain degree, Kovu is exploring that, is sort of wholesaling, right? Is the ability to work together with other agents, right, as a wholesaler, and sort of distributing different products and upselling, cross-selling products across agencies, in here in the States. So there's probably more opportunities there, I'm guessing.
Makes sense. Okay, so going back to the conversation, but we kind of like This went sideways a little. So we spoke about investors and entrepreneurs getting MGA wrong. Anything else that stands out to you of something that in the past few years entrepreneurs and investors have got wrong massively and or getting wrong now?
Well, I mean, there's also the overall trend of, I think in 2019, 2020 to, at least the end of 2021, we were in a bubble in the technology world and valuations got out of whack. And and I think that, it happens. There's a bubble in different asset classes every, decade and 2 decades, whatever. Every asset class has its own cadence, has its own cycles. But that sort of bubble was overhyped in insurtech. So it's not just that the underlying business model on those carriers was one that I don't believe inherently supports venture capital. It's, even though venture capitalists came in, there was so much hype in the category that the valuations that we saw were just, they weren't really close to reflecting what the real value would look like. And then what happens on the other side is you get in those private or newly minted public companies, you suddenly have your valuation cut by 90%. And the issue with that, right? The issue with having such a drastic change in value is that everybody around the table just kind of loses motivation, right? If you're an employee in one of these companies and you're banking and being compensated by your equity, now your equity is worth 10% of what it was, right? If you're an investor, you're like, okay, what do I do? I'm in the red here. I've lost all this money. If you're a founder in those companies, it's very demotivating to see all those things. And in private companies, when they get down rounds, so-called in startups, it's literally it's destructive to the company, right? Like top talent leaves, all those things happen. So there is a price to pay if we're blowing a big bubble in insurtech. And I think a lot of the operators, executives in those companies are kind of feeling that now.
So what are people getting wrong now? Anything that you feel like still is a trend that people are getting wrong?
I don't know. I think from here it's only up and to the right, and I'll tell you why. I think insurance in general could be one of the biggest beneficiaries of the revolution we're seeing with data and AI. I think insurance has always been traditionally a data-driven business. Insurance is a business that feeds and also is getting fed by data, um, and I think that actually now is a great time to innovate in insurance. It's just not necessarily in the insurance carrier model. It's with other approaches in leveraging technology in insurance. So I'm not. I actually think that from here we're only going to have breakthroughs and innovation in insurtech. It's just going to be very different than what happened in the last cycle.
So I think that's a good entry into the other topic, which is you spoke a little bit about, like, let's talk about some of the areas that you're excited about. So you spoke about agency space as a category that you're excited about, and you're also very excited about like different applications of data in insurance. Let's talk a little bit more about these. So the data discussion that you just had, where do you see the most amount of impact? Is it like use of data in underwriting and new product innovation, or where else do you feel like there's going to be massive leverage coming out of these new AI breakthroughs and data breakthroughs?
I think there's two main narratives that I'm personally interested in and also actively investing in that I think are super interesting. The first one is new types of data sets and capabilities for underwriting purposes. So I'll just give you an example of a business that I've built together with Arity, which is an Allstate owned company, basically the data business inside Allstate. And together with Life 360, my company that I was previously at that we took public in 2019, we built a very interesting business where Life 360 is a mobile app that continuously tracks how family members drive. It's a family safety and peace of mind app where you can see where everybody is and know that everybody's safe. And there's also a key feature around crash detection and response and driving behavior. So Life 360 has the technology capability of knowing that through your phone that you are driving 50 miles per hour got hit by the side at 30 miles per hour, got dragged for 20 yards, and it's a severity 8 accident, and then we can send an ambulance directly to where the accident was. This is a life-saving feature where we send over 100 ambulances a day and saving lives almost daily, right? Driven by technology. It's wonderful technology and life-saving again. And the other piece of that technology is really having a deeper understanding, especially for newer drivers, and kind of, how are they driving? Are they doing some of those risky things that we all did as teenagers and we all know are kind of, dangerous doing? So the interesting innovation there around UBI, usage-based insurance, which I think has a very long way to go across a lot of different insurance products, is how do you leverage that information in a way that is compliant, that is privacy first, and actually benefits the driver, benefits the family when they're, for example, purchasing auto insurance, okay? So what if, for example, and this is some of the things that that Life360 is working on actively with its insurance partners. What if, for example, when you go and you ask for your next quote from Progressive, you could opt in. This is not something that automatically happens. You can choose to have Progressive, as part of their underwriting process, actually receive your driver score to see if you're eligible for a good driver discount, but like an actual good driver discount, not because you don't have claims history, but because you are actually a good driver. And what if we can, as a society, get to a point where we know we have 2, 3, 5%, more like 2% of all US drivers who are responsible for 30+% of the premiums we all pay because they're dangerous drivers. And we don't know how to detect them. But now there's a data-driven way to detect them. So what if we make the rest of the population of safe drivers pay less because they're actually safe drivers, and we know that. And unfortunately, for the 2% that choose to, drive recklessly, they're going to pay much more because we see how they behave on the road, and it's perfectly fine for them to pay up for their driving behavior. So I think that's a very interesting use case, and there's many use cases like that across UBI, and leveraging new types of data in underwriting that can really help insurance carriers kind of better understand risk across assets, people, and so on and so forth. So that's one interesting narrative that I track very closely. And I have some investments in that space, including ZenDrive, for example, which is one of the leaders in that space. Another one that's interesting for me, another investment thesis, if you will, that I'm very focused on is, of course, the massive gains in leveraging data and AI in productivity. So we know that in underwriting, in customer support, customer service, renewals, adjustments, and so on and so forth, there's a lot of manual work that is getting done by people. And some of that work is, we need people there because this is customer facing and they have to have a conversation with the client, and the client wants to have a person on the other side to help them think through what's the best insurance for them and what's the right fit for them and their family or their business. So I think, people, agents are always going to be there. But what if we can make them 10x more productive, right? And I think we can. I think there's a lot that we can automate, either directly to consumer, right, to the customer. So the customer, for basic questions, for adjustments, for, renewals, a lot of that can be automated with, an assistant, an insurance assistant, right? And what we also see and find is that people feel more comfortable sometimes just like talking to an assistant instead of having to pick up the phone and talk to a person. Like, it's not always a good fit. And maybe you want to talk to an assistant at 2 a.m. at night, and nobody's going to pick the phone and talk to you in your agency when you want to talk at 2 a.m. about, your home insurance. So I think there is a real opportunity there on the customer-facing side to streamline, automate, and improve quality of service for customers, right? That's one. The second piece is, I think we can make, people working in carriers and in agencies, I think we can make them so much more efficient, right? At the end of the day, there's a lot of manual back and forth that's happening. Emails are going back and forth. They have a CRM. They need to pull up the data. They need to get quotes. They need all that stuff. we can make, existing staff in those agencies, we can make them 10x more efficient, right? And we can do that with AI, we can do that with digital tools. And what I always keep saying is, you know, we've seen how banks have done a tremendous amount of work because of the competitive landscape to really bring their services to the digital age, right? You go to a major bank in the US today, they've got a kick-ass website where you can transact, do a lot of things. Their IT systems work. That we have Plaid, we have integrations in place. You can do almost everything today in the fintech world, in banking, in with brokers, stock exchange brokers and so on and so forth. You can do all those things. So the banking and sort of investment infrastructures have already been brought up to speed. IT and insurance is not there yet. This is an area that's behind. You see, like, show me the equivalent of a Plaid in the insurance world. Like, I was looking to build an experience in Life 360 where, and some companies like Gabby, which was recently acquired, have this, but like, I was looking to have an experience where a user can come in, log in with their credentials. We would pull the coverage page from a Progressive, a Geico, this is all for auto insurance, and automatically see if there are benefits to be had. Can we lower the insurance? Can we get competing quotes? But you can't really get a competing quote unless you have an apples to apples comparison on the coverage page, right? It's covered. So like, that technology doesn't exist. It is so basic in a way to have those APIs, to have access to data, to have single sign-on, like all those capabilities that should really make it much easier to better serve customers and deliver insurance, but they don't exist yet. So all this digitization, all this accessibility, all the automation, I think there's a lot to be done at the insurance care level and at the agency level to make all those things happen. And the result would be higher margins, happier customers, and better products.
By the way, if you're still looking for those, I know a few companies now that have started in the past 2 years or so with the focus of collecting deck pages automatically. So always happy to make an intro. So, I mean, we spoke a little bit about like banking as a comparison, like how different it is than insurance. So let's just create our ideal version of what is the future of insurance. Like what does the future look like when it comes to insurance and risk management? What is your future? What do you see? What do you think 10, 15, 20 years, I don't know, from now, insurance should look like?
So I don't know how much you know about the open banking initiative, where there's a standardization of the ability to access data and transact in the banking system and the brokerage system, right, in financial services. So I would really love something like that in insurance, right? Instead, what we're seeing is silos of data and capabilities, each being hoarded by a significant player, different significant players, right? And I think it would be amazing if there was one open standard in which carriers and agents could freely exchange with consent, with all the privacy and compliance guardrails that we want to see, right? I would love to see a future where that open insurance standard is going to be there. And anybody that wants to build digital applications or AI assistants on top of the underlying data would be able to do so. I'd love to see a future where, similar to the breakthrough that we've seen in financial services over actually pretty recently, over the last 2-3 years, you can have an external entity, let's say a digital service, actually buy and sell stock for you. So why can't we have, an agent that, using a standardized API, is capable of completely underwriting and actually delivering a policy to a customer as an agent, just using standardized open APIs? I think that would make a lot of sense. And instead, what we get is this set of API from one carrier, another set of APIs for another carrier. Each integration is different. We don't have standardization around, the underwriting process. What types of data do we need? What weight do they carry? Are they mandatory? Like, whenever you start digging into all the details and understand how to build those integrations, you just figure out that every carrier is completely different, and you've got to do 30 integrations to actually build your product. That's not how it works in financial services. So I hope that 10, 15 years from now, in the future, we'll have a much smarter standardized system that will accelerate innovation. And it's not just about making startups better. I think it will really, really help incumbents stay on top of stuff, because if they don't create this open insurance alliance, if you will, they'll get undercut by startups who will, right? So it's an opportunity for everybody, including incumbents, to take the industry to the next level.
Okay. What else do you think the future is going to have? Like, what is the distribution that you see in the future? I know you're big on agencies. Do you feel like agents are going to still be super relevant in 10, 15 years, 20 years? Or embedded insurance is a thing? Like, what do you think that's going to look like?
I think agents are not going away anytime soon, because I fundamentally believe that people want to buy insurance from people. And sometimes you need to look them in the eye. Sometimes you need to talk to them on the phone. But I think there's always going to be, and look, we've had waves of innovation in insurance, right? I remember when I was, not a kid, but a very young adult, when the concept of buying insurance online was first appeared. It didn't exist before, right? And and ever since that happened, where you can actually buy insurance online, get a quote, bind even, you were still looking at a dramatic number of policies being binded non-digitally. So there's still a long way to go. But the reason why I think that's happening is because people want to talk to people. And that's why agents are not going to go away, ever. Captive and independent. Both are going to stick around. Um, I think what's interesting for agents is how they can kind of take and transform their business to be increasingly digital, right? Why can't agents compete? And we've got, a new generation of digital agents trying to do that online. Why can't those agents compete over providing the best, customer acquisition and the best service online, creating, good, capable digital agents? I think we'll see more of that, but those are still agents, right? So I think that's not going to go away.
Got it. And what other trends do you think is going to have a massive impact on insurance over the next 10, 15 years? Tech trends or non-tech trends that just, is going to be relevant, create opportunities in insurance or disrupt insurance?
I don't know. I'm a pessimistic person, so I guess global warming probably does not spell. It doesn't sound great for insurance, right? We could see massive and growing amounts of claims if that's true across the board, whether it's fire, hurricanes. We've got a lot of things going on. Um, I, you know, what I secretly hope also is that, especially for the big PNC players, insurance will be less of a concentrated business, right? Because we're now, again, I'm thinking more about PNC. We're now in a world where we've got, it's not actually new, but there's a few dominant players who have such a significant market share. And, I'm not saying they're monopolies. I'm definitely not an expert in that area. Also, we've got, regulatory bodies who are spending time making sure that everybody's playing it fair. But I would love to see how the insurance industry gets, a little bit more distributed in its market concentration, like financial services is, right? You've got hundreds of local banks. You've got so many different players who are providing financial services. And then when you come to insurance, you see this higher concentration. So I'm hopeful that innovation is going to drive more and more and more types of carriers and agents who are going to really do a great job in servicing their customers in their narrower set of products that they deliver to the segments of the population that they address. And that's what I hope will happen. Because if it does happen, guess what? Us, the consumer, we're going to be happier. We're going to get a better product that is underwritten better, right? Which means that if we're actually, on the safe side of history, we're going to pay less and still get the same great product. So that's what I'm looking forward to have.
That makes sense. Good. I mean, I think overall that's most of my questions. Two things. One, is there anything else that you want to cover that we haven't covered? And two, I'd love to kind of just get your thoughts on what do you think the rest of the year is going to look like, and maybe beginning of next year. Is it going to be as hard as it is for fundraising, or is it going to open up a bit?
Yeah, I think for fundraising in general in startup land, it's kind of the story of the have and have-nots. Um, with if you're building an exciting generative AI company, you're going to get funded, you're going to get a very high valuation, and so on and so forth, because that's really what all the hype is. And hype cycles look like that, right? Like when mobile came out, it was the same. When web, 2000 it was the same. When cloud got big, it was the same. So I think we're going to see the same hype cycle happen with AI, and then things will take 5 to 10 years to actually materialize. But that's great. Um, so I do believe that for the have-nots, and unfortunately, insurance, insurtech, and financial services, especially on the lending side, are kind of in the bucket of the have-nots, right? People have been burned. I have friends, I won't name them, who are founders and investors in some of the, sort of new age MGAs, carriers that we talked about. And I mean, let's be honest, these guys are down. They're down big time. They had companies worth billions of dollars in their hands, and some of them are only worth, a few millions, a few hundreds of millions now. So these guys have been burned, and it will take time before they come back into the market, actively bringing valuations up, actively pouring significant amounts of capital into new insurtech players. And when they do, I don't think it's going to look the same. I don't think you can show up now with a new MGA wannabe carrier that wants to do home insurance better and actually get funded. And naturally, 8 years ago, that was all the hype, right? So, um, so I think you're going to see a shift in the market, and I think that shift is likely going to look like the companies that will get funded are going to look more like the companies that I talked about, where there's like new underwriting models, leveraging data, or automation, and leveraging AI in the insurance business. That's where the money would go. It's where it's going now, and I think it will increasingly go there next year.
Perfect. Super helpful. Anything else that we didn't cover that you would like to talk about?
No, I mean, at some point we should talk about how awesome your company is, because it's great. I'm very excited to be part of the journey. You now probably, the listeners probably now understand also why I invested in Kovo, because I think you guys offer some of the best opportunities, if not the best opportunity, for an agency in the US to bring it to the new digital frontier. You're giving them tools and capabilities, both in servicing their end customers, in significantly improving their processes internally, leveraging AI in the process, which is clearly the next big platform. You're basically doing a lot of stuff that I, as an investor, truly believe in would be groundbreaking for insurance agents. So I'm very excited about what you're building, and I'm really crossing fingers that it will be as big as we all imagine it will be.
Perfect. Well, Itamar, thank you so much for all the kind words, all the little plugs that you threw at Kovu in the episode. And
I believe in it. It's not just hyping it. I do actually believe in it. Yes.
Okay. Thanks, man. Appreciate it.
Thank you.
All right.